talked about how to pay. Let's jump into the income tax formula. Remember how I gave you that not very helpful estimated taxes formula? Well, here's the actual income tax formula. And it's somewhat lengthy, and it's might be a little bit hard to understand, but it's really critical to get this formula because it's essentially what the tax form asks you to do. And it's the backbone of calculating your income taxes. So let's start from the beginning. We start our income taxes with gross income. Then we can subtract any adjustments to income. And that gets us to our adjusted gross income. And adjusted gross income is really important. It's a very important term as well, because this number is the basis used to determine whether you qualify for various tax credits and benefits. So you want to bring down your AGI as much as possible, because this is kind of what the IRS used to determine whether you qualify for very beneficial credits and deductions. And it's used for a variety of things, even in the healthcare world for Medicare, right? They look at your AGI and determine what benefit you qualify for. So it's really important to lower this number as much as you can, do adjustments to income. From there, we can lower our adjusted gross income, AGI, sorry. AGI is the acronym for adjusted gross income, and it's used a lot that way. So, and I always use AGI going forward. So we can subtract standard or itemized deductions. And basically the IRS understands income taxes can be a burden and gives you ways to save taxes, one of them being deductions. And this includes standard or itemized. It's one or the other and not both, but it brings down your taxable income. All right, and taxable income is important because this is the amount that is actually taxable. It's the amount you apply the tax rates to. So it's important to lower your AGI with adjustments to income, but it's also important to lower your taxable income through deductions. From there, you would multiply your taxable income by the effective tax rate, or you can use the tax table if math is not your strong point. And then you would get your tax liability. Remember, tax liability is how much you owe the IRS before considering the amounts that you already paid throughout the year. From there, you can reduce your tax liability through non-refundable credits. What non-refundable credits are, they are credits where if you apply it to your tax liability, it cannot go negative. So if your non-refundable credit is greater than your tax liability will just be lowered to 0. You're not going to get extra. From there, you get your tax due. That's how much you have to physically pay. But then you can also lower that with refundable credits and your withholdings and estimated taxes that you paid throughout the year. And that will get you to your adjusted tax due or your adjusted tax refund. So refundable credits are the opposite of non-refundable credits in the sense that refundable credits, if they're greater than your tax due, you actually get that extra money back. So if your refundable credit is $2,000 and you only have to pay $1,000 in taxes, you would get $1,000 back because it's a refundable credit. And of course, if you overpay through withholdings or estimated taxes, you get that money back as well. Okay, so there's a lot to take in. We're gonna break it down a little bit, but I also want to show you something else. In the tax industry, adjustments to income are also called above the line deductions, and the line being adjusted gross income. So that's how important it is that they call it the line. So when you adjust your adjusted gross income, it's called above the line deductions. When you adjust your taxable income, it's called below the line deductions because it's below AGI. It's not going to impact your AGI anymore. So it's below the line. And non-refundable credits and refundable credits are credits, and they lower your tax liability. So these are all ways to save on taxes at the end of the day, right? Above the line deduction gets you a lower AGI. Below the line deduction gives you a lower taxable income. And credits lower your tax liability. A lot to take in, I know. But we'll break it down bit by bit. We are at the halfway point. Do we want to take a break?